Welcome to the Cardinal Commentary for the Canadian Equity Portfolios. Canadian investors were hit with a double whammy of rising inflation and rising interest rates for much of 2022, but it looks as though both are subsiding. Inflation, which peaked at 8.1% in June, had fallen to 6.3% in December, thanks to lower prices for gasoline and durable goods, such as automobiles, appliances, and TVs. And while the Bank of Canada increased its overnight rate 7 times in 2022, moving it from 0.25% to 4.25%, it has hinted that the rising rate environment is nearing an end. The 25 basis point increase in January was the smallest since last March, and some observers are predicting rates will be cut as soon as this fall. The interest rate hikes are working, as both consumers and businesses are cutting back their spending. The Bank of Canada expects inflation to come down as low as 3% by the end of this year and then reach its 2% target in 2024. President and Chief Investment Officer Evan Manser believes inflation will continue to be a factor this year, but after falling in the last few months of 2022, the numbers should continue to move in the right direction throughout 2023.
We're on a course for that, I don't know if we'll get into 2%, but that 3% rate. In some areas, like in goods, we're seeing deflation. In certain areas, autos, we're starting to see that. We still have high services inflation. That's the area that's keeping it up even year over year. But a big portion of that is shelter, and shelter is a backward-looking survey that lagged on the way up. We think it'll follow on the way down. So we think inflation will still be a big piece, but if you parse it out month over previous month or quarter over previous quarter, it looks a lot better than year over year, which has also been coming down.
A company like Couche-Tard illustrates our investment strategy. The footprint of the Quebec-based operator of more than 15,000 convenience stores extends throughout Canada and other countries, such as the US, Mexico, Sweden, Denmark, Poland, Japan, and China. The company has grown its revenues continuously, more than tripling them since 2015. And just as importantly, it has continued to increase its dividend, which has grown nearly tenfold since 2012. In fact, it had the biggest dividend hike in our Canadian portfolio last year at 27.3%. Manser says Couche-Tard is an ideal company for the Canadian portfolio because it's a global leader, its results are predictable, and its growth prospects look bright.
They've got a strategy that's been working for them for a long time, which is to be a consolidator. So in that, they're the largest in the world in terms of those convenience stores and gas stations. And it's very fragmented, so you got a lot of small owners that don't have the buying scale and the management expertise that Couche-Tard does. So effectively, you've got billions of dollars of assets out there that are probably worth double in Couche-Tard's hands than where they're at now. And so they've been doing that. We think they'll continue to do that. And then recently, they've also been benefiting, as some of us may have noted, from the probably highest fuel margins we've ever had on the retail side.
Our strategy of investing in industry-leading, dividend-paying companies continues to pay off. Over the last decade, the annual dividend income on a $1 million investment has grown from about $36,000 to more than $80,000. And last year, 20 of our companies raised their dividends, an average of 11.3%. Following Couche-Tard was Sun Life with 3 dividend hikes, 20%, 4.5%, and 4.3%. And 8 of our companies announced 2 increases last year, including Canadian Tire, Suncor, and the Royal Bank. Our Canadian portfolios outperformed the benchmark by more than 6% in 2022. But that's no surprise. They have outperformed over virtually every time period since inception, nearly 30 years ago. Here's the proof. If you had invested just $100,000 in the Cardinal Canadian Equity Portfolios in 1997, it would be worth nearly $1.5 million today. And why do we do all this? Because it works. And that's the Cardinal Commentary for the Canadian Equity Portfolios. Thanks for joining us.